Hello friends, most of the people must be familiar with this face and this personality. His name is Ashish Kacholia and he is one of the famous investor in India, and he generally invests in small cap companies, and many of the stock that he has invested in has turned out to be a multi-bagger. I don't think we should do that. We should not follow anyone blindly, but we should also not ignore what the big investors are doing. So with that said, let's get on to the recent news. So here you can see the recent news that Ashish Kacholia raises stake in this chemical stock in Q3 and the share has jumped today. So you can see that the shares showed an upside of 3% today, and you can see the article here that Ashish Kacholia bought additional 1.22% stake in the chemical stock, and here you can see that he invests basically in the small cap segments, and he is also considered as the big whale of Indian stock market, and the stock in which he has raised his stake is Yasho Industries. He has raised his stake from 2.6% to 3.82%. Now let's check whether the share has any power or not. So this is the chart for Yasho Industries, and you can see this was up around 3% today. And if I look at 1 year return, it is almost flat, 4.52%. If I look at 5 year return, then the story changes completely. It has provided massive return of 1552% to its shareholder, and this stock has not even completed 5 years till now. So return wise, the share looks fantastic. Let's look at the business so here you can see that this company manufactures specialty chemicals, food antioxidants, rubber accelerators and lubricant additives. And here you can see the revenue breakup for this company. The aroma chemicals constitute 14% to the revenue, and the products include clove oil and its derivative and other natural essential aroma oils. Next, they have food antioxidants, which contribute 13% to the revenue, and the product that they manufacture is used for keeping the food fresh and appetizing for a longer period of time. Then they have rubber chemicals, which constitute 35% to the revenue, and their product is used in tires, automotive components like hoses, seals, etc. Next is their lubricant additives, which contribute 14% to the revenue, and they work under the brand Yalub, and the additive that they manufacture elevate the performance of lubricants by improving their oxidation resistance. Next comes their specialty chemical business, which contributes 25% to the revenue, and the specialty chemical that they produce, it is used by clients across multiple industries. And here you can see some more details. The end users of the industry. End users are manufacturers of tires, conveyor belt, personal care products, edible oils, fragrances, animal feeds, etc. It has well-known companies as its clients like Dabur, Seat, Apollo Tires, JK Tire, MRF, Adani Wilmar, and many more. And this company is also doing capex. They have acquired 42-acre land in Dahej for a greenfield capacity for expansion. And capex is always a good news for any company because it helps in increasing their revenue. It also gives us a signal that company is expecting its sales to grow in the future and the demand for their product is going to increase. And if the sales revenue increase in the future, ultimately their profit is going to increase, which ultimately is going to push the share price as well. So a lot of new investors get excited whenever there is a stock split or there is a bonus, but generally do not give much attention to capex. However, this should be the other way around. The bonus split hardly make any difference to your invested amount. Your invested amount remains same. The actual benefit that you will get is from the capex in the long term. We have seen the business. The business looks good. It has various segments which are contributing to its revenue. The clients are also very good, and the product that they are manufacturing are generally using products which are essential like tires, cosmetics, food, etc. Now I am at the yearly number of the company, and in March 2019 the sales were 340 and the operating profit was 37, which dipped in 2020 due to COVID. It was around 297 and the operating profit was 40. Then it started increasing. In March 2021 it was 359. Then in March 2022 the sales increased by 71% and the profit also almost doubled. And now in the 12th trailing month again we are seeing an increase in the sales percentage, and the profit is around 117 for the 12 trailing months. And if you look at the sales growth, 5-year sales growth compounding has been 26%, 3 years have been 22, and for 12 trailing month it has been around 55. And the profit compounding also has been fabulous. 5-year compounding is around 70, 3 years 64, and 12 trailing month around 75. So the increment that you're seeing in the share price looks legitimate, looks valid, because the profit of the company are also increasing at a very rapid rate, and that's why we are seeing a rapid increase in the share price as well. And you can see the CAGR return in 3 years have been around 128%. In last 1 year it is around 10%. So now I'm at the chart for Yasho Industries, and till now the details that we have seen in terms of business, its financial, the company looks strong. The company's financial looks strong, the business looks strong, but we need to remember that this is a small cap company. So in case you like this company after doing your own research, then you should invest only a small portion of your capital to ensure that the risk is controlled. In companies like this which go up very quickly, they can also fall very quickly, and since it has already provided a return of around 1500 in less than 5 years, it can easily correct by around 40-50% as well. So 20% discount in this company is not a very big discount. But when the share was available at around 1300 level or 1400 level, this was a good opportunity if anyone wanted to invest. But right now what you can do is you can do more study on this share and wait for the quarterly result for this company, and after that you can take a decision whether you want to go with this share or not. But in case your decision is a yes, then do remember to invest only a small portion. So that's it in this video. We'll meet in the next video with some more information. Thank you.